Everyone, welcome to the KE Report Daily Editorial on Tuesday, November 25th, chatting with Daryl Fletcher. Daryl and I are going to be going around the horn of a lot of the commodity sectors. We're going to start with energy, go to precious metals, then go to base metals, and see if anything is catching Daryl's eye, as Darrell is the managing director of commodities at Bannockburn Capital Markets. Darrell gives us more of the commodities trading desk side of the story here. So, Darrell, broadly, markets, whether it's the broad averages or the commodities, have slowed down in the last, let's say, month or two. A lot in kind of correction territory, but nothing, as far as I'm seeing, maybe outside of oil, breaking down. Oil continues to be in its downtrend, but other than that, a lot of these commodity sectors feel like they're just taking a little bit of a breather at the end of the year, again, after what has been a pretty good year. Just curious, since the U.S. government is back to work, we are starting to see some COT reports. Let's start there, Darrell. Any major changes that you're seeing in these commitment to trader reports?
Yeah, hey, thanks, Corey. Yeah, we're just starting to sift through those because they're releasing two reports a week now, and it's going to take till, ironically, till the end of January to catch up. It looks like just looking at the schedule, and which could be just in time for them to shut down again based on what was agreed to. So yeah, we're sifting through that. We can go through it, but relatively to your point, it's been a calmer month, and specifically in the past couple weeks after we had some peaks here in kind of early to mid-November. Broadly calmer. I follow the Bloomberg Commodity Index overall, and that's really basically kind of flat on the month because that's a very broad index with about 25% splits across energy, ags, base, and precious. And then, reflecting that, gold and silver have found their footing. At least, they've kind of consolidated here. I think we had like gold didn't move that much at all in the month overall. Base metals are down about 2% in the month. Energy's really flat on the month, although crude's starting to break down a bit. We can talk on that. And yeah, crude's are down about 5% on the month. So that's kind of been where the volatility's been on the energy side. And it just feels like we're in a general consolidating pattern here as we get towards the end of the year, especially in the metal sector. On that volatility, the Bloomberg Commodity Index total return, that the TR one I look at a lot, that 10-day volatility, as you would expect, it kind of peaked out in April, right around the tariffs. And I think it peaked out like 34% 10-day vol. And then we've kind of averaged 12% on the year, and now we're about 6, 7%. So it's kind of really reflective of some consolidating going on in the market, and that's been led by the precious and base metals markets, I would say. So yeah, it's commodities are never boring for sure, but we're in more of a consolidating pattern right now overall.
All right, let's dive into energy. Let's start with natural gas because that's at least been moving higher. Natural gas, from what I'm seeing, is trading at levels we haven't seen since late 2022 when it was falling quite quickly from that just spike move we saw in that year. It's been persistently higher in 2025, and now we're seeing this breakout at the end of the year. A lot of people saying that weather, again, driving these moves. But we do keep on hearing about LNG terminals, how those are slowly coming online. What, in your eyes, is driving this move, Darrell, and is it sustainable?
Yeah, the move is this is typical. We see these big moves up in, let's call it early winter period. And so the front of the market, yes, it has moved up quite a bit. The December contract comes off the board tomorrow. That's going to be very interesting because there's some big option positions at 450. So in terms of NYMEX Henry Hub, we're up about 22%, I think, on the December contract, but in the 1 month, which would include that November rolling in, is up about 35%. So it's like the market has gotten very defensive and guarded in the front, preparing for what could be a very cold winter, but to be seen. It hasn't been so far. I think December forecasts have been shifting colder, but honestly, to me, it doesn't look like anything very specific. It just feels like the front of the market got positioned to be guarded for a tough winter. It'll be remain to be seen. Everything's really about weather and storage right now. We sit about 4% ahead of the 5-year average in terms of U.S. storage and a little bit below the year over year, but it's not alarming to me. It seems fairly ample if we were to have a normal winter. So the other driving factors that they'll probably, fall to the backdrop a little bit right now because we're in winter, would be the LNG exports, which have been, increasing to about 17 plus BCF a day. And that's been a steady climb. But production has been hitting the past couple of weeks, 108, 110 BCF a day. So production's running 8% ahead of year over year. So I don't know, the curve's really gone into kind of a steeper backwardation. There's really even not that much of a premium on the January contract, which will roll to the front on Wednesday if I have that right. So it's just gotten itself guarded in case of a really, deep winter, but that's to be seen.
Now, with that whole production side of things, that's one I wanted to ask you about is with these higher prices, and in all fairness, it was a little bit more stable of a price for natural gas this year, generally holding above $3. Do you expect to see a whole lot more natural gas come into the market because of the less volatility this year and now this price move?
I think a lot of those gains we shall see, will have kind of been realized now with these production numbers coming up so much. And yeah, it's been a decent market this year for producers. So we'll see. I mean, if you look forward, you're in backwardation with 26 at 413, 27's at 4-ish, and 28 falls off to 380 range. So yeah, that's pretty good. Those are pretty good levels for producers. So we'll just have to keep an eye on this production level to see if it keeps increasing or not. But I really feel like this big price move has been really just getting ahead of a potential deep winter, and I tend to think storage is in a really good spot, and we'll have to see what happens here. But yeah, it's been a big move, and it's been volatile. The front month has been very volatile the past week or two with big 10, 20, 30 cent swings. But that's not that out of the ordinary as you get to winter. You get your first big cold snaps through. We finally got some below normals on the temperature map here, especially in the east. And whenever that happens, it's going to spike up until everyone calms down. That's just kind of how it goes in natural gas.
Yeah, the volatility, usually that is a constant in natural gas markets. Now it's coming back in to the upside too. But what I'm hearing from you in terms of storage and production and just the time of the year that we're in, it sounds like it's a fairly balanced market. Yes, prices are at multi-year highs, but do you think that any sort of major price spike is for the most part off the table, barring some sort of black swan or political event?
I do. Yeah. I mean, for natural gas, barring a really deep winter, it's going to come down to weather and storage. And again, storage is ample. It's not super high, and it's definitely not in a problem situation. We're 4% ahead of the 5 year. So it's really going to be, you need a deep winter. Outside of that, I find it really hard for it to take a big move up. But, weather can change quickly. Positioning, getting back to the COT reports and the two that have come out here in the past week, actually there's one, is definitely moving lower on the positioning, but it's still not long. So it's hard to tell. We've got, from a COT perspective, we have a couple of months to catch up data to get there. But again, it's going to be fundamentals for natural gas, weather and storage, tracking storage. We had a pull on storage last week. It was 14 BCF, which was mainly in line with expectations because we had that colder week a couple back. And that's not out of the norm to have a draw that early. The past, I think, 4 to 5 years, we have had small injections in the same week. So I think the next 3 weeks, from a storage perspective, forecasting, I think this week's kind of up in the air if it's call it zero. So you can go either way, a pull or a draw, and then it starts to draw. But that's pretty normal.
Okay, let's move to oil because boy, oh boy, crude just cannot break this kind of painful downtrend it's in. It's not crashing, but it just keeps drifting lower and it is close to dropping to lows for the year, even lows for, I believe, a couple years now if it gets below this kind of $56 level. What's going on in the crude story here? It's just not getting any love from the market.
Yeah, Corey, you know my position on this year has been range to lower all year, and it's really keeps just grinding lower and playing out. There's been some risk premium in the front of the market over Russia, Ukraine, and I think some of these peace talks that are going on now, like there's been a deadline thrown out there for Thanksgiving here in the U.S., has started to narrow. So you've seen this break below 60. You did see a test last week in the low 57s of what would be the low of the year in May. So I'm sticking with that. I mean, I think there's some risk premium in the front here still that could come off if there's some kind of a concrete agreement on Russia, Ukraine, and I think you could definitely see this front fall. I'm really watching for this curve to fall into a more sharper contango, and I wrote that in my update yesterday, where the front could come off. We're going to have some tests at 57, 55, but you could, come off a good $4 or $5 here in the front. And you know what else is very interesting? And the curve is extremely flat. If you go out 36 months, there might be a $2 differential between the front month and 36 out. So it's an extremely flat curve. And I think the movement that's going to be there is going to be a continuation of a grinding lower or a larger move lower in the front of the curve.
So, Daryl, what's the downside risk for oil? Because, look, as it keeps grinding lower, big question mark is just how low can this oil price go? I keep on reading all these reports of how crude is historically cheap when you compare it to the stock market, even to other commodities like gold, like copper. But that, of course, doesn't need to be a here and now type of thing where price moves higher. So, in your eyes, what is the downside risk?
I think in the short term, you're probably looking in that 55 to $57 range. The 57 is clearly going to be the next test because it tried to do that last week. I don't see it like I know there's some people talking like 40s and stuff. I don't see that. I think when you get in these low 50s, you're going to see some production start to turn back. And then, maybe I think the next big OPEC meeting is December 10th-ish time frame. They've already indicated starting to slow down the increases in January. But I still feel it's going to keep grinding lower. You're probably going to test like 57 to maybe 55, and then maybe it will settle in there and some production will come off.
When does OPEC need to lower some of their quotas? When do they actually care that the price is dropping and they can't sustain their production?
I think low 50s gets, low 50s on the WTI, so call it, mid to low 50s in Brent is going to would probably start to be a problem in that area.
All right, let's move over to precious metals then, because look, as good of a year as precious metals have had, everybody was waiting for a correction, and we are getting a correction. The metals sold off. They've been, in a way, kind of consolidating a relatively muted sell off, I think, considering just how well they've done this year. The stocks sold off to a greater degree, but those bounced really well starting this week. What's your outlook for precious metals and I guess even more importantly, how long this correction could last?
I'd agree with you. I don't think it's much of a correction. I feel like it's more of a consolidative move we've seen here. It was just interesting to see the action in gold. Like clearly it's all out of the headlines now, where it was, a month or two ago when that was all everybody was talking about. And it's kind of quietly found some footing here around 4,000, a little north of 4,000. And it seems to just be consolidating. And to your point, it's been, a great year for precious metals. And I think, it's probably going to be just, we're done for the year and move on here. I think the things that can come into play are going to be the Fed, what the Fed does here in the US, and the next meeting, which has become very divided, it sounds like. But I think the market's got it at 75 to 90% chance that they will cut still. So interest rates will be in play, but I kind of feel like it's going to consolidate here for the rest of the year after making such a nice move. Yeah, and I think silver is actually taken over platinum on the year-to-date lead here of the ones that I follow. So it's been a good year, and it's clearly found some footing here. Actually, we're moving higher today now again.
So the one thing that's caught my attention, at least in the precious metals space throughout this year, going to all the conferences I have, is the new people that are investing in the sector. I believe they're very much chasing momentum because gold stocks were outperforming pretty much every other market. I think they were outperforming every other market this year. How important do you think it is from these other investor standpoints for precious metals to not just consolidate, stick around here, but get back to all-time highs?
That's a good point. I mean, there's definitely been some catch-up play and trend following in this market for sure. But I think like the underlying fundamentals still make sense in terms of like just diversification and all the central bank buying. So I don't know. It's a good question. I think It's going to be very interesting to see what gold does in 26 after this big move. A good flushing correction, you might call it 3,800, would maybe get some of this momentum chasing investment out of there. But we'll have to see. It's going to be interesting. I'm going to probably start to focus on 26 and kind of looking forward on that space for sure as we get into December here. But I kind of feel like it's going to continue to consolidate through the end of the year.
Okay, I'm very curious to hear your thoughts on the ETF flows then, because look, you're not a gold bug. You just cover the resource sector, and some stats I've been bringing up so much is Q3 was essentially a record quarter for ETF gold-backed ETF inflows, and it was led a lot by U.S. investors and U.S. institutions. Did you see this data? What do you take away from this sort of data?
I didn't see the details out of it. I know in general, correct. Yeah, you're correct. A lot of it is catching up, especially on the U.S. side, investment into gold relative to other countries. So positioning, like the positioning reports that have come out, I think we got one from early October in the past few days to try to keep track of all these reports releasing now. The positioning's, still long, slightly down overall. I did a quick look on these today. It was interesting. The WTI crude COT positioning did go negative in early October, which doesn't surprise me. Natural gas is kind of going lower, and copper has moved higher in terms of net positioning. So again, it reflects kind of this consolidation we've been in the past, month here on the precious side. It's probably healthy for the market to have this consolidation right now.
Yeah, well, that's what a lot of the technical people are saying, that it is healthy. Now, one other aspect that I'm sure you hear too, but you always hear from the bullish side of things saying just how under-owned commodities are compared to other sectors. If only tech investors, if only these other sector investors would put 1% of their portfolio into whatever commodity sector, just look at how much it would run. I feel like I've been hearing this my whole career, like 20 years in this area in the commodities sector. What do you say to people that are saying, look, if we just get some tech, some Bitcoin money into the sector, it's really going to scream higher?
It's a sound argument. I mean, I think the questions around that are interesting is, well, what is the right rotation for investment to go from, government bonds? That can be very questionable. How large that position is, or to your point on Bitcoin shifting, like, what's the right number though is hard to tell. And clearly we've seen U.S. investors chasing that and making some of that diversification up. It's interesting. It's a very interesting question because what is the right number? And every investment, investor, whether it's institutional or individual, is different. But is it, should it be 2%, 5%, or higher? It's very interesting.
Yeah, and just if that money does come in, yes, it will pull it, but we don't really know what it will take to bring that money in either. Let's go over base metals. Let's talk copper. Copper also, I guess, a little bit of a correction, but really just consolidating around that $5 level, where I feel like we've been talking all year about it. What's your outlook for copper? What are you seeing in any reports? What are you hearing from your clients?
Yeah, very similar to gold. It's been consolidating in the past month on the broader base index. LMEX is off about 1-2% on the month, and copper's off about 2%. Aluminum's actually off a little bit on the month after having huge moves this year. So same thing, kind of in a consolidated move. Front COMEX copper's right around $5, and it has been north or south of that pretty tightly in the past couple of weeks. You've got about a 10% premium now on COMEX copper over LME, so that's settled down. The inventory, we touched on this earlier. COMEX copper inventory continues to increase, and that's been a huge move. It hasn't really backed off. So I think that kind of reflects that. Same thing in Midwest aluminum premium being up 280% this year. The tariff, even though the tariff talk has settled down, it's clearly not off the table. I think Commerce Department has deadlines out there of 2026, mid 2026, to have any further decisions around tariffs, especially on the U.S. on steel, aluminum, and copper, probably. So it still remains pretty guarded, and I think fundamentally positive. It might consolidate next year, but I think fundamentally it's still in a really good spot as we get longer term.
What do you take away from those copper inventories, though? All-time highs on COMEX. just simply people being worried about the tariff regime, or are, I guess, some people trying to get ahead of the fact that we hear of all these shortages coming, so they're building inventories?
I think it's both, but I think as it pertains to the COMEX inventory staying really high and moving higher is just a reflection of the fact that the tariffs aren't off the table in this space. There were some discussions around phasing back in refined copper tariffs in 27, 28. So it's clearly a tool for this administration. And, they're just not gonna take it off the table. So it's still in play. And that's an interesting thing to watch as we get into 2026.
Now, these high inventories, kind of the same question as nat gas. Does it take off the table any major price spikes?
I don't think so. I mean, the forward curve is still contango and COMEX at least. I think it's a little bit backwardated in LME. So the longer term fundamentals are still really good. So, I mean, it can put a ceiling on it in the shorter to midterm, maybe in 2026, especially. But no, I mean, I think it's just they're just trying to position right now flows as you get into 2026 and what may or may not happen.
So then, Daryl, if we take a step back, then looking at all these different commodities, even some of the smaller ones that we haven't talked about, anything that's standing out to you, anything that you think the market's missing, or any areas where your clients are talking more about, looking to hedge or build exposure in?
No, I think in the big picture, this calming down we've seen here in the past month is probably really good for the market. It's been a very interesting year in commodities, and we've got another month to go. But I think that the metal side will probably remain pretty consolidative here through the end of the year. I think energy, particularly in crude oil, is going to be interesting to watch in the next month. That move could happen fast, in my opinion, if we have a sharp move down. And then natural gas is going to be, weather driven. So I'm starting to look ahead already to 2026 and think about, what the drivers are going to be. It'll be interesting coming off of it has been a pretty volatile and generally a good year, especially in precious and base.
Oh, a banner year in some of these. Yeah, and yeah, I
Yeah.
think a lot of people are starting to look ahead to say what is coming for next year, and can these metal sectors follow up? We keep hearing about just how positive the long-term outlook looks like, but look, those long-term outlooks can change, but right now, yeah, a lot of people at least have commodities even more on their radar, which is encouraging for these sectors that were kind of unloved there for quite a while. All right, Darrell, wrap it up here. Again, Daryl Fletcher, Managing Director of Commodities at Bannockburn Capital Markets. Click that link to visit the Bannockburn website, find out a bit more what they do. Daryl, great chatting with you. We'll chat again next month.
Okay. Thanks, Corey. Take care.